Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, May 4th, 2022. Powell has spoken, Fed's out of the way, and here in a nutshell, the market has interpreted what the Fed has done and what they've said today as dovish. As such, the Treasury bonds, which are highlighted recently, they're running. That's going to help Treasury bonds, so those are looking good. Gold and silver are rallying today, and of course so is the stock market. So I have pivoted, as I said I very well might, and here's at least for now, and here's why. You have the 60-minute chart, you had the downtrend line. Remember, everything in the immediate wake of the Fed is noise, and then after a few zigs and zags, the market will pick its direction once it's done. So we came in, basically, remember, we failed that breakdown today, but anything again in front of and immediately after the Fed should be taken as nothing but Fed noise, because we quickly recovered it. And then the next level that was taken out, which was a pretty big one near term, and excuse me for not mentioning, I'm on a hourly chart here, that 60-minute chart NQ. So we popped that level, and here's where I think we're going today, and then that's where I have longs that I'm going to reverse when we get just shy of that 13,502. I'm going to show you the comparable level in QQQ and SPY. Just wanted to mention that. So that's where we're at now, and it has implications on the longer term chart. Let me just go through the futures, and then I will get to the ETFs, and I'll get to gold, silver, and Treasury bonds. All right, so on ES, this is a 10-minute chart. Again, the same downtrend lines I've been looking at on the indexes. Remember, we're coming off bullish divergences, which are now firmed up pretty well. We've been moving away off those divergences. Fed's out of the way. We came in, broke out pre-Fed, which of course proved to be a whipsaw, and then broke down, failed it, which that proved to be a whipsaw. But we also this morning held nice support there, 41.43.75, and again the trend line. So effectively, just pre and post Fed is a little bit of noise. So effectively, you have a breakout of the trend line now, and we're well away from it. So that's bullish. And this is where I think we'll go today, 43.04, and then you'll have a pullback. I'll probably reverse, but that's active trading stuff. For now, I've pivoted and reversed all shorts to long positions. As I said, I very well might this week, and that's what I've seen so far and what I've heard from the Fed and the market's interpretation. Now, if anything changes, I want to just say this. We are at resistance right now, 42, almost 42.60 right there is my first resistance level on ES on this 10-minute chart. That could be the stopping point. I'll certainly react as such. Unfortunately, by the time this video gets out to you, we'll either be through that or have been rejected off of it. On the 10-minute chart of NQ, let me get to that real quick for you. Trying to do this quick as possible to get out. I have my first resistance. I think I would have given you in the last video. I can't remember. I have 5-minute charts, 10, 60s, 13,424. So both indexes are at resistance, but again, I think we go a little bit higher today to about this level, and then get a reaction. Let me show it to you on QQQ, because I know a lot of you guys trade the Qs. And look, I'll even, when trading NQ, I always look at the Qs, because that is, during the day, you have a lot of traders in QQQ and a lot of eyes on it. 329.80, that's my magic number, where I think we'll get to today, and then provide a pullback trade off that level. But again, it's near term, intermediate term, and near term it's bullish. The fact that we've done, again, taken out the downtrend line right here, clearly taken it out now. That's a breakout. That's, we had a little candle just before the Fed, now two big impulsive green candles. So that's that bullish falling wedge, big divergent low, positive divergence still in place. And again, next stop, 329.80. If that gets taken out, whether we have a pullback first or not, I do favor a pullback, 335.83. And as I said, there's still plenty of work to go. And guys, the week is not over. This is still post-FOMC noise. Now, so far, it's clearly going in one direction, so I'm trading that direction. But I may pivot back, and I will do my best to let you know as soon as possible. But I laid out levels to look for earlier, and I'm laying out those levels again right now to trade off of. SPY, let me show you why where I think that's going. So we're at, again, as I just showed you on the short-term charts of the futures, we're back on 60-minute charts. That's what we were just looking at on NQ. This is 426.50. I have minor resistance there, but this is a bigger level right here, 429.50. And again, that's where I think we're going today on SPY, followed by a reaction, so a little more upside. Most likely get a reaction there. If and when that gets taken out, reaction or not, 436 is my next level and a pretty big level as well. So those are your near-term targets. Any big reversal today, we'll still need to take out the lows and follow the divergences. And remember, we could even pull back, make a marginal new low, and keep the divergences intact. But if they wipe out all this post-FOMC rally, which is still possible, I'm going to show you other charts, then something else is going on. So pivoting is the key to anytime you're an active trader. Don't get married to any one position, one bias. IWM, I wanted to point out, this is a 60-minute chart, rallying back to big resistance right now. We are coming off a divergent low, did just put in a divergent low, and so the divergences are playing out. And again, that's that big level here. So if you're taking bigger picture, you go out to the weekly chart, we're just back testing right now. So I have actually, just before the video, even though I'm still long right now at the moment, the NQs, and then reversed my RTY small caps futures there, and I'm going to sit tight with that one for a little bit, give that a little room, but I still think this post-FOMC rally could crap out and get sold into at any moment. So again, pivoting is the key. We are at those first resistance levels I just showed you on the 60-minute charts, IWM, SPY, QQQ, all that. So that could be it for the rally today, or we go up to those next levels, which just a little bit overhead, not much. So we're talking on QQQ from where we were a minute ago when we were right at that resistance level. So far we're pulling off of that I showed you on NQ. You're only talking another 0.5 percentage point. So, and I like to step in and sell early. So that's where we are. I think, let me look at another screen. Nope, they didn't fill me yet to reverse there on NQ, so I might have to pause the video and reverse myself if that's all it's going to be, because remember here, this is kind of as live action as I can get going to these charts. Boom, that's it. That's that first resistance level, and then next one wasn't much further above. So the sellers could step in here. But again, probably get a little pull. We'll get a reaction off that level. We've already had a reaction. That's a reaction. Reaction is when you're going up on price. A reaction is either a pause at a level or a pullback. Pause being a consolidation, and it's all commensurate to the time frame. It's a 5-minute chart or a 10-minute chart right here. So the reaction would be relatively minor. But there's a lot of buying right now. And again, the takeaway is this Fed is just so flipping far behind the curve that I think the markets are just laughing at Powell. All they do, it's been mostly rhetoric. Yeah, the biggest rate hike, the 50 basis point in oh gosh, forget the statistics. It goes way back, 20-something years, maybe 18 years. But again, the federal funds rate is far from neutral. We'd have to take the federal funds rate up to about 7%, and we're at 1%. So we still have an extremely accommodative monetary policy, despite the jawboning of the Fed. The market sees right through it, and so that's why we're rallying today. All right, those are your levels. And again, there's the potential for more if this sticks and we don't get faded this week. Remember, it's still D-Day week for me until Friday. We'll see how we close the week and pick up next week. So as of now, markets like what they see. Technically, and most important to me, again, technically, everything is these divergences are getting firmed up. And remember, those divergences carry all the way out through on the daily chart. And then just to wrap it up here and leave the markets and move on to gold and Treasury bonds. Here, this was a very big level to me, and it still is. That yellow line's about 317. We had the pre-FOMC brief whipsaw move down through there, put in a divergent low, but we're back above it now. So to me, you cannot, absolutely cannot be very bearish until and unless they take out these lows. And that can happen. If it does, boom, that's going to be bearish, especially if the divergences are taken out. But as of now, that is another successful defense of a very important support level, including those two recent lows and support back there. And they did it with a little whipsaw, recovered it, and with positive divergences. So price action, that's nothing but bullish right now. And if tomorrow we do this, run down here, then I'll say that's extremely bearish price action. The fact they undid, the bears were able to undo this, the sellers. But right now, buyers are in control at this moment. SPY, same exact thing. My big level here, 413. I'm sorry, 411. It's been support. It was a major reaction low right there. Like everything else, we had a brief, that was not even on a daily close, just an intraday whipsaw, but it gave us that divergent low, and so far we're moving up. PPO is starting now. The PPO has turned up, guys. I talk about this being a momentum indicator, and it was heading lower, lower, lower until just recently. Now, if you look closely, the RSI and the PPO are pointed up. They haven't made a bullish crossover yet, but there's that strong divergence, pulse of price action. There's the resistance just a little overhead as well in the daily chart, about 428.64. So like I said, plenty of work for the S&P to do. You know, just running today, could run into tomorrow, into the week, but it's going to start slowing down here, running into some big resistance levels soon. And again, just stay flexible. If all this gets faded soon, especially by the end of the week, because that's all that matters. If you're trading a long-term trader, investor, and you're trading the weekly charts, well, that's all that matters is how you close the weekly chart. Right now, you can see there's the yellow line right there. SPY's holding the line about 415.50. Okay, and then yeah, I think I already did. Yeah, I showed you IWM testing, back testing the key level right there as well. Let's talk gold and silver. So we'll give you some additional buy signals or bullish developments. Been, not stubbornly, it's the charts tell me. I've been sticking with the gold trade. Still not crazy. It's below 1895, but we'll be very happy to see it regain that level. Now, the fact that it's traded through a few times makes it a little bit less significant than it was back here when it was nice support. Then you broke. You had the whipsaw. I thought that was bullish. And it was, but then it failed. But then you put in, again, day by day, minute by minute, the charts are changing. So I say the charts are dynamic, and so is my analysis. Put in that bullish falling wedge, and that's what I like. And I mentioned it when we got back there last time. The one thing that was missing and why it wasn't a hard buy for me this time around as it was here, it was only a soft buy because we did not, at this point, have positive AK bullish divergence, but we did right here, and that's a big thing for me, obviously, are those divergences. So far, walking its way up. Again, nothing huge. Gold is only up. Gold futures are up 0.8%. Nice intraday turnaround. And if you want to get really tight and look at where to maybe put whether you want to put a stop there or not, but zoom in, you can see some recent lows right there, about 1860. That should ideally hold, and of course the divergent low needs to hold as well. So again, this is initial reaction to the Fed. It's taken as dovish. It means the dollar's dropping, the euro's rallying, bonds are rallying, and let me show you silver because I know I'll get questions on that. Silver's usually going to follow gold. There are times they'll go their own way, but there it is. Nice pop in silver today, taking out the recent trading range here by a little bit. Plenty of work to be done on silver. Near-term target would be that 24 level. That was a big level that failed, back-tested. I want to see that recovered. Until then, whatever. Silver did put in, like gold, of course, and as I mentioned the other day, divergent low right here. That was nice positive divergence on the 60-minute chart, walking its way up. And then, yep, I'm talking about the metals. So let me show you the currencies. E7 euro popped on the Powell's perceived dovishness, and then the dollar would be right here. I think I had you on a 60-minute chart on the euro. This is a 120-minute chart. Every candlestick's 1 hour. It's 6 months. You can see the dollar recently broke this uptrend line. It would kind of hovering around, waiting to see what the Fed did, and then this right here, all this big red drop here, that's post-Fed, and that's what the market thinks of what Powell had to say and what the Fed had to say. So still looking for a pullback here, 99.344. If that happens, that would be very bullish for gold. And same targets. I gave you these targets a while ago. They haven't been hit. That's 99.344, and then this uptrend line right here, which comes in around price support around 97.730. If that happens, that's going to be very bullish for gold and silver. Should be, because a falling dollar tends to be bullish for gold, and vice versa. Last but not least, Treasury bonds. That's another one I've been holding on to, and they popped. Let me zoom in a little bit here and show you what's happened around the meeting today. So an initial pop right there. Some of it's being faded so far, but I'll jump back to that 60-minute chart I was just on. Remember, we're at long-term support or long-term resistance on interest rates, bond yields, I should say, the 5, 10, and 30-year Treasury bond yields. And when you look at it from this 60-minute chart, we had that divergences here, divergent low right there. And so far, we're still above. That divergent low is held. We had a rally, pullback, which also gave us a smaller divergent low, at least there on the RSI. Holding this line, I think this is an important level right here, about 139. I want to see that level hold. If not, we may go on down and just extend these divergences that have been building and building. But I still say or believe what I've said weeks ago. I think the downside in bonds right now for the near term, I'm talking weeks to months, is limited. I think another way to say that, the risk reward is favorable. In other words, I see minimal downside risk compared to the upside potential should rates pull back a little bit and we get a rally out of bonds. So that's ZB. ZN is your 10-year. Oh, that was a loud price alert. ZN's a 10-year. You can see ZN pop that trend line right there. After putting in, we've been diverging. This is our most recent. Take that line right here. That was our last divergent low, and that's all I do. I drag the lines. And you can see, and remember, these are momentum indicators. You don't even have to use these. They're telling you the momentum is waning. We've been in a downtrend, but you can just eyeball it. This is an impulsive downtrend, and all of a sudden, see the slope of this line? Now the slope is starting to level out. And that's why your momentum indicators are turning up. That's why you have the positive divergence there. And then finally ZF, big pop. Remember, I've been favoring the shorter end of the yield curve, meaning the 5-year over the 10 and the 30. And nice pop up to that first target I gave you the other day, 112.280. So far a reaction there. If it can take that out, we should continue up here. At least near term, I think that T3, which was still put on when I first put this as a trade idea back here on a break of this downtrend line. We went up, hit my first target, hit my second, pulled back, and I think we'll go on up, work our way up to the third target there. So that is it in a nutshell. Still long Treasuries, still long gold, silver, and flipped over, from short to long. Like I said, didn't make sense going heavily long or short into the FOM, because you probably would have got, if you were heavy short or long, here I'll just show you, you would have probably been whipped out 3 times over, and that's the norm. You go to QQQ, look at a 1-minute chart. This is today right here. So here's 2 p.m. right there. So at 2 p.m. the market ripped up about almost 1%, then dropped from there about 1.5%, then bounced about 0.8%, then dropped 0.8%. Even from the spike high down to the spike low today, that dropped about 2.23. This is what I'm talking about. This is, again, 2 p.m. was right here. This is what I call post-FOMC noise, and how I always say the initial reaction is often not the lasting reaction. Right now, this appears to be, this was the initial reaction, and this is the reaction that so far is sticking. And again, I can't pick it apart or dissect it or try to spin it. Right now is anything but bullish, but we're getting very close to my first target where I think we'll get a reaction, and at least that's how I'm going to game it, something like that. All right, guys, or at least for now, to pull back, trail stops down, pull back targets. You got to use the 5-minute charts and 10-minute charts for that. Pull back probably here. I've got a purple uptrend line, something like this. Boom, boom. But if we get anything else, this is a lot of trades occurred here today in this range right here. And so if you want a magic number that'll do the trick, obviously the recent lows, if you take those out, but this line here about 315 is a big support level right now. We had, other than that pre-Fed whipsaw right there, and again that was also a bullish falling wedge pattern. Other than that, we've had that level has had some major reaction lows right there. So all right, let me stop it here, get the video out to you guys, and as always, if anything changes or anything else stands out, I'll let you know. Okay, this has been Randy Finney with Right Side of the Chart. Have a great day.